Sorry about that. All right. Good morning, everyone. Let's kick it off. Exciting day potentially ahead of us. Had a little bit of a zigzag last night in the States. Kind of very low volatility. You can see there the height of the entire channel to the side, and the S&P was about 4.5 points. So nothing to get excited about. Very little actually happening on the market on the day. We had the S&P that did once again only just hold the 2,000 level on the close, which was obviously significant. We had Tiffany's and Michaels & Co. that both rallied on stronger than expected numbers. We had people like Smith & Wesson that were a bit soft on the day. Apple was trading nicely on the back of a full screen iPad for some reason, but bottom line, there's nothing going on. Extremely light volumes again. Probably mostly because of the fact that but we've got the Labor Day weekend coming up. That's usually the last week before kids return to school in the States next week. And all the big fund managers usually go away. They take kind of that last week or 2 weeks off and spend some time with the family before everybody goes back to school. All right. So that's the calls for the light volume. Bottom line is Asia. You can see there was kind of down across the board. Nothing too significant, mostly around about 0.5%. A few interesting things to take note of, most particularly out of China. We had China, some of the property developers that were really heavy on the day. I was looking last night. The negativity around the property sector is starting to get pretty intense again, and I think that it's starting to, the fears are really starting to come to the forefront, and what's going on there with the property sector. You saw it this morning in the iron ore prices in Asia, which are actually limit down. So we're probably, I think we dropped down to around $85 this morning, or $85, $86, something like that on the iron ore price, which is starting to really, I would think, put pressure, real pressure on some of these iron ore producers. Remember, the outlook for iron ore production for next year, for 2015, is expected to grow significantly. That's every broker across the globe. No, it's not just the broker. All of the big producers have told us that their production is going to go up significantly next year. So that's all this production is going to be hitting an environment where it looks like we're going to get significantly less demand, and the price is really starting to reflect that. I think we got to pay very close attention to this morning. The guys in our office are expecting that to really put some pressure on our index. A lot of mining heavy stocks, obviously, specifically to iron ore, the likes of Billitons and Anglos and Kumba and ARIs and that. So just keep that in mind. We're going to look at a couple of those on the charts in a little bit, but probably a big story for the day. The other major story that's really going on right now is here in our charts of interest today. That is the yields across the globe, which continue to come down and take out lows. You can see here now for the last, basically since the beginning of the year, we had pushed up to the highs, recent highs in yields at the beginning of the year here. If you look at the beginning of 2014, we had spiked up into the end of last year. Everybody was really expecting things to continue to run higher, and we've only gone lower basically for the entire year this year. We've got yields taking out lows everywhere at the moment. You can see there across the board, especially when you look at Europe right now, more specifically Germany and France, really wiping out exceptionally low levels. We're below 1% on the 10-year yield in Germany. We're starting to get down to crazy Japanese type yields at the moment in Europe, and I think that's really interesting. And I think the market's telling us at the moment here that the globe is not, the world economies are maybe not as healthy as we thought only maybe 5 or 6 months ago, and probably a lot of that being led more specifically out of China. So we need to watch this one closely going forward. But I think, with yields being under pressure like this, this is going to be it's going to be a really interesting environment. Obviously, it continues to make stocks a preferred environment because you can actually get some sort of yield there. But at some point, I think it actually becomes a big negative overall and is pointing to negative things on the horizon. All right, a lot of earnings out today. We had Woolies that was out with full year 2014 numbers. We had headline earnings per share came in basically dead in line, missed by maybe a cent there, but beat by a little bit on the revenue numbers. Divvy number looks a bit soft, but everything else I think looked pretty solid. Just reading through some of the analysts' comments this morning. They really like the country road numbers, look really good there. They improved the margins on the clothing side. They improved margins on the food side. A lot of them were expecting that, but bottom line is, that the operational results were pretty good. I think the one thing that was a negative were the bad debts were a little bit higher than expectations, which we would have assumed after seeing all of the problems with a lot of the lenders, over the recent couple months. But bottom line is pretty solid numbers out of Woolies. The guidance looks solid, so all in all, probably in line to solid numbers. All right, Massmart also coming out with numbers this morning. We had that big negative trading statement that came out recently. The guidance on that trading statement was for 1 Rand 69. It came out at 168, so a little bit soft. Obviously, the divvy coming out soft from the previous Bloomberg expectations, and there that revenue number is the miss from the previous Bloomberg expectations. So Massmart probably more or less in line with the trading statement. Not so sure how that's going to react today. Impala also coming in pretty disappointing on headline earnings per share, even relative to guidance. You can see the revenue number may be a little bit better, but it's just watching some of the comments come across on the headline on Bloomberg this morning. One of the comments the CEO made a second ago I saw said that the costs for the full year 2015 will not be pretty, was one of his comments. There's a lot of interesting stuff here, immediate plans to raise more financing. A lot of comments that probably won't be looked at as positive, so I'll probably expect Impala to come out and be a little bit under pressure this morning. We also had Adcock Ingram came out with quarter three numbers this morning. Headline earnings per share looking to be 180 lower by 164 to 168%. Could be interesting there as well. All right, a lot of market data out on the cards today. Some numbers out of Spain, early CPI and GDP, unemployment rate coming out of Germany. The Eurozone has economic confidence, consumer confidence, and M3 money supply numbers. We've got PPI numbers here at 11:30. Keep an eye out for that, expected at 7.9%. Germany has CPI numbers at 2, and then you get a monster set of data out in the States later, most of them coming at 2:30. Initial jobless claims, GDP annualized, continuing claims, personal consumption. Then later we've got Bloomberg consumer comfort and pending home sales. So big swath of data out today. Going to be interesting to see how this everything is affected. Right, let's get into the maps. All right, the first thing we're going to have a look at here is we're going to start with some of these iron ore producers we talked about yesterday. Or a couple days ago, and we talked earlier about the iron ore being limit down this morning in Asia. 185, you can see here we popped up above this. We had a big close on the ARI 2 days ago. Yesterday, we got above 185 as well in the early session, kind of failed it. Anyway, I think it's key. We dropped support. We came over, just got a touch above it, and then we've dropped it again. Couldn't really get back above and hold the 185 level. So I think that is kind of a bearish setup that we did climb back above 185, but only to give it up the very next day. Obviously, iron ore under pressure this morning. You would expect this to be under pressure as well. If we look at Kumba finally also dropped. There's a couple different ways you can look at this. Obviously, we've been looking at it, from sort of trend support here that really dropped down out of this broadening formation. But if you also look at, there was a little bit of horizontal support right around here that we kept holding, and you can see there that we've really dropped it. And yesterday finally started to push away from it. We closed below 330. The lows of the year, the closing lows, in fact, are at 323. So I think taking those out today potentially will obviously be very bearish on the stock. Could give us way to see us complete the move all the way down to as low as $300 in Kumba. If you look at Discovery yesterday, only closed right at $100, but either way, let's just pop this out a little bit here to a 2-year. We know that the major levels were here around 99-ish. Call it 99. I'll zoom it in a little bit so we can see it a little bit better. Yesterday we had a trading statement come out on Discovery, very solid trading statement, obviously, and you can see there we pushed higher out of that number. At one point we rallied to as high as I think about 102.50, only to close down right at 100 on the nose. And there's also a little bit of a head and shoulder, inverse head and shoulder setup that's kind of forming here. If you look, I think it's actually really symmetrical, and basically the neckline is showing at about $100 there, and you can see so a little inverse head and shoulder setting up. Probably take us to a quick target of around $106, $107, somewhere in that neighborhood, and in a move higher here out of Discovery. So watch this one closely. I really think this is a proper breakout that's happening here. I think we really probably do need to push above 100 and get our first close above 100, and I think this thing can really take off. All right. Let's look at Goldfields, which has been the absolute star performer out of the gold sector here as of late. It kind of seems like they started to come in and buy Goldfields and sell Sibanye or something along those lines. Not really sure. Bottom line is, we definitely are breaking out of some sort of a level here in Goldfields above these recent highs. If we back it out a little bit more, we can actually see as well, you can take this level all the way across. There's a bit of a level here, which I think is very significant, and I'll show you why. Because, in the big process of this downdraft, we made a monster bounce here off of this 48 level, all the way up to north of 65, which is a huge bounce percentage-wise. We came back down, and we took that out. And when we took it out, we consolidated just under it, pushed down a little bit, came back up, really spent some time there, almost a month, kind of testing around that 48 level, only finally to just kiss it, and that was the kiss goodbye, and it really ripped down hard off this level. So I think the 48 level is really the significant level that we need to look at, which we broke above yesterday, if I'm not mistaken, only to kind of come back and close more or less at that sort of level. Or just above it. Yeah, so we've definitely broken above it. I would call this 47.50, maybe this level, and we closed at 48. So bottom line is that we've gotten above this level. I think we need to watch this level closely. If we can hold above here, I don't see any reason why we can't continue to start to run to the upside. I do think this level is actually quite significant. Right, next one we'll look at is Capitec. And let's see here, we're on a 2-year chart. Let's just go, we'll drop it down to a year. You can see here in Capitec that we've dropped major support, which I think is quite obvious on the chart. What is nice about this chart is how symmetrical everything is right on this line, just below 220, call it 218. We dropped it. We were actually really pushed low very hard in one day. We spent a couple days kind of trying to push up, trying to get back above this line. Couldn't do it. And we kind of almost to an extent have been flagging down, making a bit of a bear flag here. We dropped out of the bottom of that yesterday, and I really think that we can continue to push lower here. Some of these banks started to show a little bit of vulnerability yesterday. We had FirstRand that traded down pretty solidly on big volume. It was the first day we've had that kind of volume there on a sell day and quite a long time. So I think maybe some of these banks have a little bit more left to go to the downside, and considering some of the earnings of the locals could be a little bit under pressure. And the last one I'm going to show here actually had earnings yesterday. Imperial were out yesterday. Incredible reversal off of what looked like really, really poor numbers. I think the market may have been calmed by the fact that they're starting to move away from the vehicle sector as much. They're starting to they're at about 30% of their earnings, which are coming from offshore, and they're really transitioning the business right now. Market obviously liked that story a little bit. We bounced from a low just above 185 all the way up. That 200 I think was a finger trouble on the day, but we closed all the way up here at north in 197. I mean, absolutely massive bounce, huge reversal on the day. And I think if we get up north of 200 here, we're actually breaking out of a longer term flag. So this could be really interesting. North of 200, I think we could have quite a big upside, maybe as much as $15-16. So just keep an eye on that over the next few sessions. If we get above 200 in Imperial, could have some legs. That's it for today, guys. Good luck out there.